Hey guys, so in today's video, I just wanted to break down the ICT Judas swing trading strategy. So the trading strategy itself has a very high win rate along with very good risk to reward. So this is the reason why I actually trade this on a day-to-day basis, and I also send all of these trades in my Discord as well. So what I'll do first of all is, just so you guys can understand exactly how it is that we're supposed to trade this strategy, I've made this framework so that everyone is on the same page, right? So the first thing that we need to do is actually figure out our directional bias. So what we need to do is go into the 15-minute time frame and figure out if we're actually in a bullish or a bearish market. So as you can see right here in this image, we are in a bearish market because we are creating lower highs and lower lows, right? So our higher time frame bias is that we are bearish. So then we move on to the time. So the Judas swing happened at the end of the Asian session between the times of 7 AM and 9 AM UK time. So that is the time when we're actually looking for our entries, looking for the trade to happen. So next, we move on to the liquidity. So essentially what we're doing is we're marking out the Asian session highs and lows as shown in the image above. So this will be our liquidity, and the Asian session high and low is marked between midnight to 7 AM UK time. So of course you can update this according to your own time zone, but for me personally, as I said, it is between midnight and 7 AM UK time. So once we mark out our high and low, we simply just wait. We wait for either a sweep of the high or the low, and once we get that, we then move on to the next step. So the next step is actually the market structure shift. So once we get the sweep of the high or the low, we drop down to the 1 minute time frame, and then we wait for a market structure shift. So as you can see in this image above, we are creating a series of higher lows and higher highs all the way up until we broke the Asia high. Once we did that, we did actually change structure, because instead of creating higher lows and higher highs, we ended up creating this lower low, which means we were then waiting for a lower high before taking price lower. So that's what we're waiting for. We're waiting for a market structure shift, and once we get that, we then find our fair value gap. So a fair value gap is when we have exponential price displacement to one side. So as you can see in the image above, we can see that we had a lot of selling pressure with no buys, leaving this fair value gap where there was displacement of price right here. So that is what we would use as our fair value gap, and this will also be our entry point. So then moving on, we've got our last step, which is our stops and targets. So we take our entry at the beginning of the fair value gap. Our stops always go above the most recent high or low, and then our target will always be the opposing liquidity. So if you took a short from the sweep of the Asia high, our target will then be the Asia low, and vice versa for buy trades, right? So that in itself is our framework, so that everyone is on the same page. What I'll do is I'll leave a link for this PDF in the description below, so feel free to download it. It is completely free, just so that everyone has this framework with them. But cool, let's not waste too much time. Let's get straight into this week's analysis of all of the trades that were taken from Monday all the way through to Friday, so you guys can see firsthand me trading these strategies. And what I'll also do is I've just again got a new backtesting software, and this new backtesting software is called Trader's Edge. So the reason why I'm using Trader's Edge is because it's one of the most efficient backtesting tools available to use in today's market. The backtester is very easy to use and is so much more effective than using things such as spreadsheets and even Notion, because I have used those in the past, and this makes it so much easier. So the great thing about Trader's Edge is that they actually have a profit and loss calendar. So once you take all your trades, you can then actually come over here and see which days were actually your most profitable and which ones you lost the most consecutively in, because then you can either take those days out of your trading days or even tweak your strategy so that it works a little bit better. Not only that, but you can also literally add notes into each trade that you take. So not only is it a profit and loss calendar, but it also turns into a trade journal. And aside from that, it's got this, which is probably my most favorite tool so far, and that is your position calculator, because what you can do is you can choose what currency you're trading, what currency your actual deposit has been in, how big your stop loss is, what your account balance is, and then put your risk in. And once you hit calculate, it will actually tell you what lot sizes you need to use in order for you to get that 1% risk on your trade, right? So that's why I'm going to be using this Trader's Edge software. And the other good thing is they also have a Chrome extension that you can download and use so that you can be trading on TradingView and have it all here right at your fingertips. So what I'll do, guys, is I will actually leave a link to Trader's Edge so that you guys can all get a 7-day free trial. So that way you can actually test it out for yourself, see if you like it. And if you do, you can continue to use it further. But that 7 days gives you a no-brainer for you to try it out for free. So hit the link in the bio, sign up to Trader's Edge, and let's get on to this backtest, right? So what we'll do is we will jump straight on to Monday. And on Monday, as I came onto the charts, what I was expecting is a bullish markets, right? So as we can see right here, we've got a higher high, higher low, higher high. So then expectational order flow tells us that after a higher high, we're expecting a higher low before seeing higher prices, right? So my overall bias for this day was that we're in a bullish market. However, we're at a higher high, so I want to see a higher low being made. So then when I woke up, I wanted to see a sell. So let's drop down to the 1 minute and walk through our framework. So as we can see, I've marked out the Asia highs and lows. And after that, we're waiting for a market structure shift. So we've got our higher high, higher low, higher high. And now instead of creating a higher low and giving us a higher high, we've now got a lower low, breaking this higher low right here. That means this is now our market structure shift. And after that, again, going by the framework, we identify our fair value gap. So this will be our entry. So I had it placed right here. This is where I wanted to take price down to the opposing liquidity before seeing higher prices, as expectational order flow tells us. However, this is not what we got, and on Monday we did indeed end up taking a loss on this trade. So what we will do is we will put in here that our initial starting balance was $100,000 because that is the funded account that I'm trading on, and we took a 1% loss on Monday. So we input that into our backtesting software so that way we can keep track of total trades that we've taken, wins and losses, and the overall profit and loss right there. Okay, so I did send this trade out on Monday in my Discord saying that I was looking to sell EU. So I had it right here, and unfortunately it was a bad start to the week. So these things happen, but let's keep it moving. Let's not dwell on our losses, and let's move on to the next day. So as we move on into Tuesday, we're now again on the higher time frame, ready to figure out our directional bias. So as we can see right here, we're in a bearish market, right? We've got a lower low, lower high, lower low, lower high, lower low. So again, expectational order flow tells us that we are now anticipating a lower high before giving us a lower low, right? So what we want is to see higher prices before seeing lower prices. So that's why I was happy with taking buys right here. So let's drop down to the 1 minute and see exactly what happened on the Tuesday. So here we go. We've swept the lows of the Asian session. Now, after the sweep, we're now waiting for a market structure shift. So we've got our lower low, lower high, lower low. So now let's see what price does. It gives us a lower high, then a lower low, and then it gives us a nice higher high right there. So when we break this, we're now breaking the lower high, giving us a higher high. signifying a shift in market structure. So now we want to see a higher low before seeing higher prices, right? So again, we come on into my Discord on the Tuesday, and I said I was looking for a buy entry on Euro USD on this fair value gap that I have marked up right here. So I did send this out in my Discord, and what actually happened is a lot of guys did actually get tapped in, but for some reason, my broker did not want to tap me in, even though price wicked right here. Price wicked on my buy limit, but it didn't want to tap me in, right? So I'm not complaining, because at the end of the day, I didn't lose any capital. A lot of guys did get in and everyone was making money. However, unfortunately for me, I wasn't, but that doesn't really matter, right? So what I said to everyone in the Discord is move to break even, because it is a high risk trade. We're trading against the trend. So once we broke this high right here, I told everyone to go break even. After that, what actually happened is price did reverse, end up hitting our break even, and then for anyone who didn't go break even, price then ended up taking them out by hitting the stop loss. But for me on this day, it was a break even trade, so neither a profit, neither a loss. So that's good. We preserved our capital. Unfortunately, I didn't get in, but a lot of guys did. If anyone did hold this trade, that was a nice 2.6% return right there before going break even. So again, we can't dwell on what's happened. All we simply can do is just move on to the next day and hope for the best, right? So here we come in on the Wednesday, and on Wednesday, this is exactly what was going on. So my expectational order flow again is that we are in a bearish market, but you can see that we've got a lower low, lower high, lower low, lower high, lower low. So now we're anticipating a lower low, lower high before giving us lower prices. So I was open to taking buys from here because our expectational order flow again is bullish. So if we drop down to the 1 minute, we can see that we sweep the Asian lows. So we are simply waiting for a market structure shift, which we get right here. So as you can see, we've got a lower low, lower high, failure to create a lower low, breaking to the upside, signifying a higher high, into the fair value gap, giving us higher prices, right? So this was again sent into my Discord right here. So as you can see, I said buy limit on EU right there. And unfortunately, on this day, price taps us in and then immediately takes us out. So as good at this as this trade was, and it fit all of our confluences, price did not want to play ball on Wednesday. So we go over to our Trader's Edge backtesting software. We add in another loss for the week. So now we are down 2% overall for the week, minus $1,990, 2 losses. But that's not going to deter us, right? We are mechanical traders. What we do is we take price as it comes and we trade to the best of our abilities, right? So here we go. We come in on the Thursday, and the Thursday was an amazing day, right? So let's get straight into it. Here we go. So we come in on the Thursday. We've got our Asian highs and lows, right? I've deleted this trade, but I will show you that I did send this again into my Discord. But we've got our Asia high right there. And then we've got our Asia low right there. Cool. So once we've swept it to the downside, we can see that we've created a lower low, a lower high, a lower low, and now we've created a higher high, breaking this structure right here, right? So now we're expecting a higher low before giving us a higher high, right? But unfortunately, price came into this area right here and immediately took us out. So this was another loss on the Thursday. So we can add that straight into our backtesting software. But if we jump onto the higher time frame, what we can see is that we are inside of this higher time frame bullish leg. Right here, we are inside this bullish leg, right? So anything up here is not within the discounted range. Therefore, this is not price that we want to be touching. Once I realized this, and for whatever reason I didn't realize it early on in the morning, what I did is I decided to wait for a better entry once we get past the 50% mark. So now we're waiting for price to come down. I had this area marked out right here, which was the 61.8 on the Fibonacci. We've got this fair value gap right here. So the confluences were stacking up and I was waiting for price to tap us in. Here we go. So let me jump over to my Discord and show you that on the Thursday, I did send out the initial buy entry. We didn't get it, right? We hit our stop loss, but I said I'm actively going to be looking for another long as we're in a bullish market. So I expect price to give us a higher leg. So I'm going to be looking for longs in the blue area that I've got marked up. So this is the area right here. Prices came in and now we're waiting for a market structure shift. So we've got our lower low, lower high, failure to create a lower low, creating a higher high. So now we're anticipating a higher low into this fair value gap before giving us higher prices, right? So as you can see, I was looking for a buy right here. I gave the buy entry, the stop loss and the take profit. And this was our entry right here. As you can see, this was a 1-to-6 risk to reward trade. The confluences stacked up because we are inside of this higher time frame bullish leg. We're anticipating higher prices from here. On the 1 minute, we've got our market structure shift. We've got our fair value gap and prices tapped us in. So now all we simply do is wait for price to either hit our stop loss or give us a TP. So right here, I told everyone to go to break even once we break that high right there. So I said, move to break even because we have news incoming. So at this point, everyone went break even. Luckily, price didn't take us out right there, but we held it and we held it and we held it and we exercised our patience. And as you can see, price ended up going steadily to our target right here. So this was a beautiful 1-to-6 risk to reward trade. So even though we've taken 3 losses so far for the week, we've got that 1-to-6 risk to reward trade that hit on the Thursday. So we add that in. And if you take a look, we are now $3,000 basically up for this entire week. Even though Monday we had a loss, Tuesday we had a loss, Wednesday we had a loss. Even though we had a losing streak of 3 losses, 1 win, and we are now quids up, right? That is the power of having a high quality trading strategy such as this one. So that was Thursday, nice and solid trade. And after that, we now have the last trading day of the week, which is the Friday. And as we come straight here, we can be on the 15-minute to look out for a directional bias. Okay, so I am going to be honest. On Friday, I did wake up late. This entire week, I've been out the country. I've been in Greece. So therefore, I had been having quite a few late nights, quite a few flights. So because of that, on Friday, I woke up late and I wasn't able to take this trade myself. I wasn't able to send it out in my Discord. As you can see, Thursday was the last time I sent a trade. So this trade wasn't taken by me personally. However, a lot of the guys in my Discord did end up taking this trade on the Friday. So there was a lot of guys that took the trade because they understand how to trade this strategy, right? So what we'll do, just for the sake of it, we will break down exactly what it would look like if I did actually end up taking the trade, because it is absolutely textbook. So as you can see, we've got the low of the Asian session, which has now been swept, right? So we've got our lower low, lower high, lower low, lower high, lower low, and now we get a higher high, which means we want to see a higher low into the fair value gap before seeing higher prices, right? So we've marked out our fair value gap. We've put in our entry right there, stops below the low, and our take profit at the opposing liquidity. We play price on, it taps us in, and immediately runs straight to profit. Now this is a picture perfect textbook trade, and this was a nice and solid 1 to 7.6. So let's add that into our trading software. And as you can see, for the week, we have ended with 4.6% gain on the account, which is $4,660. 3 losses, 2 wins. So even though our losses were much greater than our wins, we are still coming out at the end with $4,660 gain on the account. Now, if that isn't a good enough reason to stick to one strategy and perfect it, I don't know what is. So guys, feel free to hit the link in the bio and join my Discord, where you'll be able to chat to all of us in here, trading the Judas swing, the silver bullet, and just having a nice chin wag talking about what we're doing on our day-to-day basis. If you do want to join the Signals group, feel free to come over here into the Signals and join the Signals right there. But apart from that, guys, I hope you enjoyed this video. I hope you enjoyed looking at the trading software, the backtesting software that I've used. If you did enjoy it, please leave a like, leave a nice comment, and I'll see you on the next one.